And I will add a chart right here for you guys to see that we started pushing away from this structure right here. Right after price printed it, this is when your life as a trader becomes a lot easier. So seeing this, I think your first immediate thought is, what is this gibberish? What this even means? Is it even important? And so on. I'm here to tell you that you really like it or not, this type of development been stopping out a lot of traders. And these are the structures that you must be aware of. Now, this type of development takes place on all time frames. These type of developments and structures are fractal. They can take place anywhere. And these type of deliveries are where traders get tons of losses, trying to force a position blowing against the main key structures that I'm about to show you in a minute. So now let's for a second imagine that price been dropping right here to the downside, ran some sell side liquidity, but on the way it's been leaving either imbalance points or it's been leaving just simply low resistance liquidity. So this is why we called it low resistance path right here with this gray rectangle. So after that, let's imagine that price rushes higher, it takes out this structure right here, and from this point you're not fully sure what's about to happen. Let's say you start aiming for potential longs and stuff like that, which is great, of course. You see one of those structures that we talked about in the previous video take place after a significant run to the upside right here. Price starts building this consolidation, runs the buy side, then runs the sell side liquidity into bullish Peter race, let's say into a bullish or the block right here. And this is the point, let's say. Then we are pretty much unsure what's about to happen. All that we know is that price right here created this dealing range from the bottom to the top right here. We have ourselves a discount area right here. So price ran into this OT type of a formation and started pushing to the upside. So from this point, all that we have, the only information that we are only caring about is the fact that price dropped lower into bullish Peter race, ran some sell side liquidity. It's pushing away from a key bullish Peter ray, and it started pushing hard, taking out this buy side liquidity right here. So now one key factor and the main thing behind these type of formations is the fact that this is where most of the traps happen. Then price starts building sharp structures, starts pointing to the upside. These type of levels right here, these type of formations become structures that we try to push away from. However, majority of traders out there, without even realizing what's taking place, if this structure right here traded into opposing bearish Peter ray, let's say, time after that price breaks below this low right here, this is when they start thinking that a shift in the leverages happened. And this is when they start focusing on sell side liquidity, looking for potential short opportunities, something like this. What they are seeing is that this high again right here ran some buy side liquidity, ran into bearish Peter ray, and then gave a shift in delivery. So this type of a pullback, they start believing that it's about to dump to this sell side liquidity pools. That we have a shift in delivery, buy side liquidity ran, price traded into bearish Peter race and stuff like that. And they start pushing right into it right here, which is a key formation. And this is something that you never want to do. Whenever price is leaving these key structures, you don't want to trade right back into them, especially when the first move to the upside leaves low resistance path, gives another push and drops immediately into this imbalance area right here, running all of the sell side liquidity. This is when, if we had a strong structure like this before, this is when all of this becomes a very simple bear trap, and price more often than not will give something like this very sharply, no hesitation. It will just dump on you right here, make you think that a shift in delivery happened, but in reality what happened, price ran sell side liquidity into bullish Peter rates, and from that point it starts focusing on the buy side liquidity again, trading away from this strong structure right here. And these type of deliveries just keep on taking place. This strong structure that we had right here now moves right here. So this is where our current strong structure is holding at. So another thing that happens after that, price continues giving these type of developments, then gives another dump to the downside, running sell side liquidity, thinking that this is a shift in delivery, and some traders start looking for potential shorts to the downside right here. But in reality, what's happening here again is a run on sell side liquidity, run into bullish Peter race right here. And price after that gives another immediate rush to the upside, trading away from this strong structure. So when you can identify which is this strong structure, this is when your life as a trader becomes a lot easier, because you simply know that this whole area right here, this whole range from this structure right here till the moment it starts pulling back, this is a trappy zone, this is a trappy range. And this is when everything that comes to this side of delivery, all the tiny puzzle pieces, all the tiny structures and stuff like that, all of these lower lows only become an inducement for price to continue gravitating towards the buy side liquidity, at the same time running away from the strong low. So everything regarding shorts in these type of situations, all the shorts, what comes to this area right here, this range is where all the traps happen, and this is where you want to be fully out from your short visions. This is when you actually want to identify the sell side liquidity, identify the strong low that price is pushing away from, especially if, let's say, we have an area that price is reaching for above, like a buy side liquidity pool or something like that. This is when we take this whole area right here, we zoom in on even lower time frame. So if this whole structure is taking place on a 15-minute time frame, in this blue rectangle right here, we would zoom into 2-minute or 5-minute, start looking for structures, and very often what you will see is that you will have those simple SMC type of formations in these type of areas right here. So this is when you actually want to trust these type of developments, and this is when you can trust them. In these type of formations, this is when you would be looking to cover some of this area right here, not place it right under this low, and with this one, reach for this buy side liquidity. So now coming back to this example, in this type of whole delivery, in this type of bullish delivery to the upside right here, what you will often see is that some lows will give you this need to run on sell side liquidity into bullish Peter raise, give a strong structure, and price rallies away from it. In some cases, what you will see, this sell side liquidity will not taken out, but you will see divergence between these two structures right here. So this is obviously when we focus on buy side liquidity again. And after that, another structure will take place. Price will print quite a lot of sell side liquidity. It will confuse traders looking for short opportunities to the downside. But what will eventually take place again, to that price will sharply run all of this sell side liquidity into bullish Peter raise. It will leave another strong structure right here and skyrocket to the buy side liquidity, pretty often not even giving you opportunities to jump on board what comes to this whole delivery. Pretty often they will happen very fast. So this is why if you are trading from higher time frames, from bigger time frames, what comes to execution charts, this is when you can obviously focus on OTE type of levels regarding this formation, because this is where usually the formation happens inside of the OTE area from 0.62 Fibonacci level to 0.79. So from the first look, it could not look like a big gem or anything like that, but trust me, test it, look into it, and trust me, you will start using this as well. This will firstly help you avoid a lot of losing trades. Secondly, this will help you to be on the right side of the lower time frame and execution time frame alignment and order flow. Lastly, this is when you will be able to identify a strong structure that price is actually pulling away from. And this is when you want to set yourself up to push and trade away from that, not into it. In other words, you want to find the lower resistance path. You don't want to trade back into all of these strong structures right here. You don't want to look to trade into them, because this is a high resistance path, and more often than not you will get blown away, because in other words you are simply blowing against the wind, looking for shorts right here, right back into these strong structures. And these type of climbs to the upside, leaving strong lows and bear traps in the way what comes to bullish delivery, become inverted. And right here you will have a bearish example. Then price went into a strong bearish PDA right here from this strong high right here. It drops lower, takes out the sell side liquidity in this case. With this initial push to the downside from some internal buy side liquidity, price runs it into bearish PD raise and drops lower, running this sell side liquidity again. This is when you have another strong structure, and all the way from this point, all the way what is happening right here, you want to keep pushing away from this high right here, not back into it. You will be blowing against the wind. So your main focus will be to start looking for entries to run away from this strong structure until price actually runs the main sell side liquidity pool on the left, fully bottoms out, let's say trades into the higher time frame, Peter raise, etc. This is obviously when you can start stepping onto the sidelines and just seeing, observing price action and what's about to happen from that area. But what comes to this whole low resistance path, and if price on this side is giving all of these these formations, this is when you don't want to fight the strong structure. This is when you don't want to fight this whole flow. You want to align yourself with it and push towards the low resistance liquidity away from high resistance structures. Now, before we end this, I wanted to give you a quick example on the live charts. And here we are on the 1 hour time frame when it comes to euro dollar. At the moment, this could be a little bit tricky, but overall, trust me, you will start seeing those structures pretty soon. And this is what we've been doing with our Continuum community as well. When price printed this structure right here, and I will add a chart right here for you guys to see that we started pushing away from this structure right here. Right after price printed it and started consolidating, our eyes immediately went to all the buy side liquidity right here, because we knew that what we have here is a strong low that we wanted to trade away from, not into it, but away from. Because what happened from this range, from this low to this high, notice that in this initial push to the upside, price built some liquidity, it ran the high, ran the low into bullish PD race. We have this bullish order block right here. We have bullish fair value gap. So what happened? Price formed this structure. Then it started consolidating because we had a lot of news inside of this week right here. You can see all of these sharp spikes here, price running and sweeping near liquidity. But overall, notice what happened. Price kept on pushing away from this strong structure right here. And this is exactly what we want to see. So measuring this, notice we are price reversed. This was the area that was acting as support, which actually on the 1 hour was our OT level. So we used this zone as support for us to push away and focus on this buy side liquidity right here. The majority of traders been focusing on the sell side liquidity, looking for price to drop lower and reach for sell side liquidity pools. So we did the complete opposite. Now, what comes to this delivery, notice what happens again. Price from this low to this high right here, it's building liquidity. Price didn't reach for this sell side liquidity, but you can see that it left this low right here. Then we had another low. So we had the sell side liquidity pool. What price did? It ran it deeper into imbalance, left another structure, and attacked the buy side liquidity. So in other words, what we had here was again a simple bear trap. Price running buy side, price running sell side into bullish PD race right here, and it attacks buy side liquidity. Exactly what happened here, just in a different formation. Price running to the upside, runs the buy side, sell side into bullish PD race, attacks the buy side liquidity. Now another beautiful formation. This was especially very clean. What comes to this whole thing, notice that price left this low now. In this first impulse, what it does, it pushes higher, builds liquidity, runs the high, runs the low into bullish PD race, forms a strong structure, and seeks for buy side liquidity again. So now if we do the exact same thing as we do right here, taking the Fibonacci from the bodies of these candles to the high right here, also using bodies of candles and highlighting for ourselves the OT area, this is where price dropped into before attacking the buy side liquidity. So again, notice what price did here. It ran sell side liquidity into bullish PD race. And by bullish PD race, I'm talking about this very clear bullish fair value gap. Notice that price tapped literally by 1 pip into this. We also have bullish order block right here lining up as well. And it exploded to the upside right from this OT area. Exactly the same thing that we just talked about right here. Then what happens again? Price here didn't give this perfect type of development as we saw here and here regarding the OT levels, but overall it still gave this bear trap, another pushing away from the strong structure right here. What price did? It gave a run to the upside, left some sell side, it ran the buy side, ran the sell side, and attacked the buy side again. So another this type of formation, running buy side, sell side, in most cases into bullish PD ring, and attacks the buy side again. So this type of formations, you can see that it can take place for a really long period of time. At the moment, it seems like it's reversing right here, but with time, you will notice cases on even lower time frames, let's say like 5 minutes or 2 minutes, how price just keeps on going like that very far. But now, as we've been trading inside of this buy model that we talked about is a low resistance path right here. So all of the time, price right here was forming these strong structures pushing towards this low resistance buy side liquidity, these equal highs. Now it completed it. So in this area right here, we are moving in no man's land. We still obviously have targets to aim for, but not as clean as this buy model that we talked about right here. So that is all regarding this video. I hope you enjoyed it and we will talk very soon. Take care, guys.